think, act, and prosper. You are now tuned into the Money Level Show.
Mr. Grandich, how's it going? How's it going?
See you, Daryl, as always, my brother.
Yes, yes. A lot has been going on. A lot has been going on. I'm going to go ahead and jump into the chart sharing. We have we have gold at a all-time nominal high, and I mean it hit over 16 or 2,600 an ounce measured in dollars. Now it's sitting at around 2590s, but it's been on a tear for, I mean, especially since March. It's just been grinding its way up. Now we're in uncharted territories. I have put on the Fibonacci extension tool on it, and I'm looking at about 2,700. You have any outlook on gold moving forward?
So, as you know, it was been my favorite investment for several years. In fact, even in 2021, I decided to sell all stocks and bonds and just own gold, and it's outperformed, but then both, despite the Dow being at a new all-time high. You show a very important part, and if it went back a few years, you would see that there was a 10-year cup and handle formation that you and I and others talked about for a while. There you go. And we had projections when that breakout came that we would get to 2536, and that was my target. And of course, it's been hit. So the bottom line is I consider all this extra at this point in time. It's been a tremendous performer. I think it's going higher. I'll say this, I've said it in recent days. Gold will see a three something without ever seeing an under two something. And but I made a decision, have a little bit of a dividend on the, but not anything to write home about. And that is I decided to take some profits in my physical gold and put them into shares, especially juniors, because I felt that although gold still had a 20% higher move, the bottom line now to the majors is phenomenal. I mean, the free cash flow, Darrow, we're going to see when the second quarter comes out, just based on what they've shown in the first quarter, having, 2,400 gold on average during that quarter is just tremendous. So we've seen them go up nicely. A lot of them have more than doubled or more than doubled, the Newmonts, Agno, Eagle. We're seeing major M&A now. And the last part is them stepping down to the juniors through acquisitions and strategic alliances. So I'm very bullish on gold. I'm as equally bullish on silver. In fact, I think, and this is really rare. People that knew me for the first 38 years of my 40-year career now will be going, did Grandich just say about what he's about to say? Yes, I actually think silver could outperform gold going forward because it has a lot of makeup room. Let's just say it can go up more percentage-wise from here than gold. Or if you took my daughter and said, which one is more likely to go up 20%, I'll take silver. I think silver is going to make up for some lost time. And so I'm very bullish there. I'm very bullish on copper. It's showing tremendous relative strength given what normally would be people selling it because they're thinking that weak economies around the world should cause it to go down. And that used to work when there was above ground supply, but there isn't the above ground supply we once had. And we really fall off the cliff in copper supply after we get through the year 2025. So all in all, gold's very bullish, silver's very bullish, copper's very bullish, and even it's the junior resource stocks to me are going to have their day in the sun.
Okay, okay. So we're looking at the GDX here. Obviously, this is just an ETF. I mean, it's been outperforming. I mean, especially since earlier this year. I mean, since what this was around May or something of that nature. And are you? Do you feel like we've gotten a confirmation of a breakout yet? I mean,
Yeah,
we're
well,
seeing higher lows for
yeah.
sure. I mean, especially since it hit here, higher low, higher low. Um, what's your take on the breakout and confirmation of the miners?
So if you look at the 32 line, you'll see that below it is would be look like a W. We went down, we went up to the 32, we went back down, made a double bottom at 26, and then we broke through the W2. I was once very much involved in technical, and I had a great guy that would say when a W is broken up, you turn it around and add it up, and then you'll get your target. And that target is somewhere in the 56 to $60 area. But you're right, also, not only off of that double bottom, we have made higher lows even after we went somewhat parabolic there in March, April period. We've not made a lower low and we made higher highs. And so all systems are go. It's just that it is such a limited followed sector. The people say that you can add up every single producer that there is, and it doesn't even come to half of the Apple market capitalization. But the needs for metals has never been more acute. And now there's even a story running today about how China is just in total control of the rare metal supply market, and that they're throwing sand at the ocean for those that think that somehow they can build up their own significant rare metal supply. And why that's critical is I wouldn't say that US and China are allies. There's no way yet to
Hmm.
call them allies. They may not be mortal enemies at the moment, but so there's just so much bullishness factoring in, and it doesn't even get a sentence in the financial media. I mean, it makes all-time highs. Gold has outperformed the stock market since 2021, since the new millennium, and has now outperformed bonds over the last 50 years. And tell me where you can find that in a normal so-called mainstream financial network sharing that. It's not. And they've treated it like kryptonite since I've been in the business, and I expect long after I'm out of the business and in the ground, they'll still be doing that.
Yeah, sorry about that. So yeah, I think you have a lot of great points there. I've been looking at gold and I haven't been touching the shares for a while. I did start buying the royalty and streaming companies and some silver equities. Um, obviously in trying to see like, okay, are we in the confirmation? Because sometimes like, you can get faked out. And so that's why I'm glad that you have the background in technical analysis because, people don't want to get faked out. Like, oh, we've broken out, the miners were getting killed for a while. Now we've broken out. And then, you have these instances right here where, people may have felt like it was a breakout and then it goes down, lower or whatnot. And so, I'm glad to see that the miners are doing well right now. What do you think the Fed rate cuts are gonna what role do you think that's gonna play in the price of gold? In
Well,
this
as you and I speak, the rate cut comes tomorrow. I'm almost certain it's 0.25. I don't think there's enough weakness yet. We saw some numbers today and yesterday that certainly don't scream that the economy's falling out of bed. Uh, I think it also gives them room that if it does continue and the employment does worsen, they can be much bigger with their cuts in just another month. So I believe it's almost certain 0.25. I think the market is rallying into it because the people that make up the industry have literally only learned to drive on a one-way street where the Fed is the state trooper who just always gives them the green sign to go ahead. There's no speed limit. And one of these days, and I think that day will come a lot faster because the fundamental problems in the world are just becoming acute. And so my opinion is short term, it'll help the stock market. It certainly will help gold. But I think in the longer term, the financial assets or the risk-oriented assets are going to have a challenge, especially with two big factors now that are just shocking. And I have to tell you, Daryl, look at my face. I am shocked, but not surprised that we are moving so close to a war in the Middle East. And at the same time, where war is already occurring, looks like it's getting worse. And there's not any geopolitical factoring in to any of the models investing past the next few weeks or months. And I just think that's a mortal mistake. I don't think people have taken into account, and that's not even talking about the numerous economic, social, and political issues here in the US. It is not beneficial normally when significant war breaks out in regions, particularly the Middle East, where so much still of our dependence on oil has been. Obviously, it wasn't that way when President Trump was president because we became self-sufficient, but now we rely so much on that. So I think getting past the next few days, and if you start to invest for 2025 and beyond, I probably want to be saying to our planning group clients, hey, listen, between now and year end, this is a time to be lowering general equity exposure, not adding to it.
Hmm. Yeah, yeah. I mean, that's pretty much my view as well. Um,
Can I
I've
give you an
been,
example of something? I'm sorry, Darryl, to
yeah,
interrupt
yeah,
you.
yeah.
I know,
Go ahead,
brother,
go ahead.
you and I chat so much off and on the air. So let's take this NVDA, this wild, crazy stock that's gone through the moon, and I don't know what it's up percentage wise. So last week, if you remember, the stock market right after the debate opened down the morning 700 points.
Yep.
And I knew that the plunge protection team had to show up, and they showed up right 2 minutes after I made a post, and they turned it. But part of the reason the market turned that day is the CEO of that company went out and said something to the effect that our clients are getting so mad because they can't get enough of our stuff. Okay. The guy has sold almost $1 billion worth of his own stock in the last couple of months, sold a ton more since then. Why
Mm,
on earth, if business is going to be so great and argue that your stock is still going to go so much higher because of that, why would you sell so much stock? And those things happen in bubbles. When people lose all rhyme and reason, reasoning goes out the door, greed takes over, and it's just another signal and something that I think people will look back on the same way they look back after the internet bubble broke and they realized all the things that were happening were just went well beyond any rhyme or reason.
hmm Yeah, yeah. I've been hearing a lot of sentiment about Nvidia and continuous, like, people are still going to be piling into the chips and these stocks that have ran significantly. Um,
But
and
can I also add
yeah,
that, and I
go ahead.
posted it on my keep saying Twitter page, X page. A gentleman's been doing some really deep research into them, and he's been putting up things from their filings. And in their filings, the story they tell publicly versus the things they're disclosing about problems and questionable financings and divisions and all, this scares me. I I hope I'm wrong, but we may have a conversation not too far in the future when you go, Pete, remember that time you brought up that conversation? Wow, it turned out it was. I mean, there's some really highly questionable fundamentals there. And I'm overly concerned that someone would be, I try to think of myself, okay, I have enough money now. He's certainly by what he sold. If my stock's about to double or triple in another year again, why do I want to give up another $1 billion? He can't get
hmm
out of it fast enough.
Mm,
And that's
yeah,
just an alarming. I'm sorry, I'll zip there, but it's a pet peeve of mine, and it's part of the issues of what I feel people don't look clearly now. They're just taking things on face value, and if it's on a network and some talking head comes on, then it must be good.
yeah, yeah. I mean, it isn't this part of like what we've been seeing since. I mean, it's probably been prior to the pandemic, but more people following the price rather than the value, intrinsic value of a company.
Yeah, what really happens is it becomes more like a commodity. And it becomes more like if you ever been around the occasional time a dice game gets very hot that it looks like the seven is no longer in the dice. And people get such of a feeling that it just keep going. And what do they do all the time in those games? They keep raising and raising their bets. Only one or two might, hey, you know what? Take some of that off. Take some of that off. No, the rest is pushing and pushing. And then eventually the guy says seven out. And that's what I'm afraid we're going to find happen to people who have gotten very overextended. I have to tell you this, I still am very big part of a planning group here, and the average people we see them all around the country. We're not limited to in fact, most of my clientele's outside the state of New Jersey, and the new people coming in are still living 1 to 2 lifestyles above their finances. And they're really one of the things they're banking on that stocks keep going up so they can keep living that lifestyle. And so the market's not going to have to go down to hurt them. It just has to stop going up and they're going to have an issue because other costs are going to keep going up. So I just think there's too much dependence and the market is too overvalued now to feel that I would want to have a lot of exposure there. Even gold, quite frankly, it was a lot easier to buy at 12 and 1300. Yeah, it's hindsight is 2020 in that. And like I said, I still think you can get to 3,000, but it's very, very hard now to find a sector in itself that's basically undervalued. They're either fairly priced, it's the best way they are, and many of them are quite overvalued. I'll tell you this, the US stock market compared to the Chinese stock market, and I'm not telling anybody to make this investment because I think the Chinese market can still go somewhat lower and the market here could still go somewhat higher. But if I was investing for 3 to 5 years and I had to be invested in both of them, I'd be long China and short the United States.
Hmm. Yeah, yeah. Yeah, I've been seeing that with the some of the Latin American equities as well as the Chinese equities. And now that the Fed is going into a rate cutting environment, doesn't that ease some of the pressure off their dollar denominated debts?
Yes. And the big story, I'm a broken clock on this, but I'm one of the few broken clocks out there at the moment. And that is Wall Street's biggest blunder in my career will be, not my career, their career, will be the misjudgment of not appreciating what the BRIC nations are becoming. And we're going to find out if I'm correct, a lot of it based on what's going to come out here in this late October when they have their meetings. I believe that they are growing into a formidable organization. We now have over 50 countries that officially are going through the process to join, with another 50 going through the initial exploration stage. They have formed both a new alternative to the SWIFT banking system and have gotten together with almost 100 and something countries and formed a security group coordination. And I think it will at least come to rival the Western world. And I say this to these young financial advisors that are even in the firm where I do my business through. I says, explain to me if 50 or 100 countries who once traded with the United States, but will now be part of a group that will look not to trade with the United States or use its currency. Tell me how that ends up being bullish for the United States. And I get what I like to call the old Jackie Gleason answer, ahem and ahem and ahem and ahem. And they can't answer. And that's where I think we're at. And so let's see, come out end of October, we'll talk again, Darryl. But I really think we're going to learn a lot more. We're going to get more info on how they plan on trading, including how they're incorporating gold into whatever this new unit they're going to have. And I think it really is going to be an eye opener. And I really think people are going to be caught flat-footed on Wall Street from it.
Hmm. I was wondering about Brazil's role in the BRICS because I think their Supreme Court just ruled out X and for people talking trash about their politicians and some other stuff and I was just kind of wondering because they seem like they more favor the West uh, rather than like the issues that are going on with China and the U.S. and the West or Russia and the West and India and such. And do you have a take on Brazil's role in like the BRICS?
None of these countries that are part of that are dramatically better off than the United States. In fact, some are probably worse off. But as a unit and coming together, they will become that. The thing that I also think that no one's talking about, no one that I know of is the best way to say it. I believe we're in the earliest stage of the European Union unification coming apart. And if you ask me where one place I wouldn't invest at all, it would be in Europe right now. And that combination, the key Western G7 countries, many of them having huge problems, Canada, Japan. I just think when the BRICS, when the rubber meets the road, we're going to see that dramatic difference. It's still, like I said, 3 to maybe 5 years away from fully being implemented, but we're heading in the wrong direction in every conceivable social, political, and economic important factor, in my view.
Hmm. Okay, okay. And I want to transition a little bit to we have the election coming up, and I'm very concerned about Social Security, the Social Security trust. It's projected to be depleted by 2033. That's not something I'm planning on depending on, but it is something that I've been paying into for a while, and it seems like there's not going to be enough people paying into it for people to receive their benefits, or for the dollar, or it seems like the dollar is going to be devalued significantly, um, or the age may be lifted significantly. So I'm kind of wondering what is this? It seems like there's a point of no return with our deficits and national debt and such. And so I've been just processing that in terms of my long-term view on how to weather those storms in the next decade or so.
So you're a classic example that I use in my work, Darryl. So I tell people that come in, if they're under 50, don't think at all of ever collecting Social Security, any part of it. Even over 50 may be a challenge. But where you're really an important part is, if I'm correct where things are going, baby boomers, which I'm part of, will peak soon. And then one thing is for certain in the world, we were all going to pass from this earth. Where we go after that is people's choices. The bottom line to that is, as the boomers peak and as they become less influential monetarily and otherwise, the younger folks will become more. And I think a guy like you 10 years from now, when we probably be on the border, whether he's been his Social Security, is going to turn around to the government, which is already going to be in big trouble because it's by that point won't even be able to pay the interest on its debt the way it's going. But going through all of that, I think we're going to come to what I call an age crisis, an aging crisis. And that's going to be when a young man like you, who's 50 and under at still at that point, looks at an old 85-year-old Pete Grandich, if he's still alive, who wants to spend $500,000 to $1 million on some big heart transplant and lungs or whatever the thing may be to keep me alive. You, who can't even never going to get any retirement, but they're still taking money from you to pay for my care, is going to say, whoa, let this guy Greenwich, he's lived his whole life. I can't even put food on my table. I'm done. Not doing it. And I'm going to say, hey, all those years I paid in, you promised that I would have that and all. And that's one of many crises I come seeing down there. And I think it's real. And think about what they've done in some countries now. They're doing it in Canada, and they've introduced it in 3 states in the United States now. In Canada, the government itself has organized, and the federal government has organized to where old people who are suffering financially and or physically are being encouraged to think of assisted suicide and ending their lives. And 3 states, including Vermont now, have introduced similar legislation. Truth. It's actually happened.
Wow.
And my concern, and I know it troubles you because I know you're a Christian, my concern is that we are going to decide whether an old person lives or not based on their economic status. Last I heard, I remember reading scripture that said, honor thy mother and father and honor our elderly and everything that we're taught in scripture and all. And that would be a big challenge then too for those who are still being, I think it's going to be even more challenging to live like a Christian as each year goes by, Daryl. But anyway, so to answer your I went a long way to answer your Social Security is, uh, I think it's inconceivable that the way we know it, the first things they'll do is this, they're going to raise the age dramatically. They're going to have to, uh, simply because we're living longer. They're going to lower the level to what you could earn that you can still get Social Security. And eventually get it to a point where if you're basically making over a couple hundred, today's dollars, a couple 100,000, you won't even get Social Security. They'll say you have some way of surviving on your own because we got to give it to the people that have absolutely nothing. The bigger problem is this. We are going to be, according to the Congressional Budget Office, at the rate we're going, at $54 trillion in long-term debt in 9 years or less now. And they figure that out without any recessions during that period, which if there are, it will become faster. At $50 trillion, at 5% interest rate, that's 2.5 trillion in hard interest expense we must pay. That's outstanding debt. It's not counting all the 100 or so trillion more of entitlements that people expected to be paid. We took in our best year, $5,300,000,000,000 as a nation. So let's just say by then it goes up another trillion. It's over 6 trillion. We're still going to have almost half of our total income going to pay interest. The government you know now and the government that provides the services they do will not exist then. It'll be far less service with far higher taxes. And Daryl, that's with a government that will still have printing presses. What do states like California and all do, who have huge budget deficits? What do we do about the unknown crisis in America? Here's a prediction from Peter. The next big crisis in America is an infrastructure crisis. We have neglected so much of our infrastructure, whether it's roads, transmitting power, all avenues, to the point we're in deep doo-doo. If you don't mind me saying it that way. I know you're right, we are. That's just the bottom line. And all these things, people are going to turn to a government to try to fix it, where the two parties can't even go in the same room anymore there. And they each have a faction in their own parties that are moving away from their center. The left is moving more left and the right is moving more right. Now, yeah, can the next few months still be good in the market? Yeah. Could this last another year or two this way? Yeah. But for people, especially your age, and I still may see it, all these things are going to hit in most of the people watching this video's lifespan. This is no longer 20 or 30 years away. It's 2, 3, 4 years away. And I still see most people unprepared for it, with no preparation whatsoever. And I'm not talking about getting a place in the woods and living underground, not even financially getting themselves in order to become less dependent and be positive cash flow. People say, what do you mean by positive cash flow? You spend less than you take in. I know that's a hard concept for people because debt's become such a way of life. Starts as a teenager. But realistically, you're going to have to, because you're not going to have a government that's going to be able to do much to help you.
Yeah.
Sorry if I
Yeah.
ruined your day.
No, no, that's a reality, And I think for me, my wife and I, we had decided to sell our rental home so we can clear our books and become more cash flow positive and everything. I mean, we could be cash flowing quite a bit if we do that, if we clear those books. And so, yeah, and just resetting, like, hey, we've learned our lessons. We've paid off some debt, but we can get out of debt quicker and be just in a more nimble and more savvy and wise, shrewd financial situation. So,
I give you 3 words, Daryl. It became my motto the last 20 years. It's cost me business because a lot of people don't want to hear it, but it's the best 3 words of advice I know when people ask me, how should I go forward? Less is more.
Hmm.
You know, I
Yeah.
could I could still get a bigger home. I could get a bigger car. I can, but it would put more stress and more strain. And one thing I'll tell you, a 68-year-old man, probably a 38-year-old man is not going to understand. I probably didn't understand it when I was 38. But mental anguish can be as vicious, if not worse, than financial anguish. And you get mental anguish in part from financial crisis. And that's why the good book, whether people want to look at it as the Word of God or just some historical book that managed to stay around a couple of thousand years, it has more topics about matters of finance and things related to it than it does about what you think the ultimate concerns would be, whoever reads that book, heaven or hell. And so in that book, the writers don't have a positive verse about debt. In fact, they have so many warnings about debt and what it leads to. And we're a society that just absolutely lives off of debt. Look, we have commercials where people are happy. Hey, get 5% back if you use this car. What about the 95% you spent on something that probably you didn't have to spend it on? That's
Hmm.
just where the world is right now, Darryl.
What type of careers or employment do you think survives in the next 5 years? I mean, because obviously you got government creates a lot of jobs, and a lot of these jobs are ineffective. You have jobs that are based off degree, or you have degrees where people go to college and you have a hard time finding jobs. I mean, you got the whole AI narrative. Um, what type of careers and skill sets do you think could help people
I think the way you
survive
have to look
this new
at it,
environment?
you got to look at it where AI can't be used. AI is never going to be an electrician who's going to be able to come in and fix that plug over there on my wall. Okay. Uh, so jobs that AI cannot perform on its own. The other thing that's happening, I don't know if you saw it, the big Mexican restaurant Chipotle now is having machineries, robots in a sense, preparing the meals in the back because of labor costs. And remember, those machines don't complain. They don't show up late. They don't go out for extra cigarettes. They don't do any of that. The problem with that is much of this replacement, this automation, robotics, is replacing more of the bottom 50% income earners. Who, by the way, just so you know, the bottom 50% of Americans now earn is the bottom half. Almost 45% now are using credit cards just to pay daily costs. Gas, electrical bills, food. And of course, they get like a monkey on their back because they only make minimum payments. And before they know it, they're in credit debt for the rest of their lives. And those are the people most likely to lose or not have the type of careers. And we're not even talking about immigration. Call it legal, call it illegal, call it whatever you want, but more people coming in for those type of jobs. Remember, those people aren't coming in and becoming all brain surgeons overnight. They're coming in to do a lot of the manual labor stuff and all. That's why in the urban cities where the lower income people working, they're screaming. Not only are they seeing their homes and every little aid that the government gives them be taken away, but now these people are showing up and taking their jobs away. So
Hmm.
it's not a pretty picture. And like I said, you'd have to look for a career, in my mind, where AI doesn't work and a robot doesn't work. I don't think a robot can still come in my house on its own and figure out my electrical problem. But I do, so I think trade,
That would be the day, huh?
yeah, well, then we're really done. And if they ever make it a good husband, then we're really done because all the wives will be rich. But the bottom line is, I do think that it's going to become more challenging. And you brought up another thing. Like my daughter, she went to college, she got a degree and all that. Her degree didn't play any role in her job. None. Zero. And and how much though? Yeah, if you're going to become a doctor, you got to go to college. I mean, you want to become a
Hmm.
draftsman, but this thing that I go to work in corporate world and start off, but if I don't have a degree, And what did it do? It caused more people to borrow. Governments made it available. So what did the schools do? They just kept raising. No one yells at the schools for the problem with student loans, but they're the real guilty ones.
Hmm. Yeah. I actually had a friend of mine. I forgot where he traveled, but he saw some of the machines in like the McDonald's
Oh,
flipping
kiosk,
burgers.
yeah. They're not only are they just they're working in the back, but they're actually now you go in, you don't even order from a human being. So you're really going
Hmm.
to go in, order a machine in the back will make it, and there'll probably be a human to oversee it and all. Just like there's a supervisor, I'm sure, on the GM line where everything's being made robotically. Somebody's overseeing it, but all those people that used to put that car together, they're gone.
Yeah, I told my friend that he doesn't have to worry about people spitting in his food or crappy attitudes when he does it.
Yeah, I wasn't thinking of that part when you brought up the robotic thing, but yeah.
uh, so yeah, I mean, another factor I was looking at. I was looking at an article recently on Amazon. The CEO is demanding all staff come back to work in person.
Yeah, I don't know. I have mixed emotions about that. I think, if you can demonstrate that people are not, their productivity's fallen or whatever the case may be, I don't know. Everybody that I know that seems to be actually working. So do I get a better worker because he or she spends an hour and a half each way to commute in tied up traffic? And then the cost of being out versus at home. I don't know. I think at the end of the day, do you well, first of all, Amazon is a little bit different. I don't know how people, even though there are a lot of robotic there too, their drivers still have to go out. I don't know how much of their staff can is versus, some type of office type of building and all. But my daughter, she had to go back now 2.5 days. And, the first thing she recognized was traffic again, and then the stress from the traffic and everything. But one of the things that's happened is by a lot of people not going to offices, big cities have seen big loss of business and revenue because people aren't going into the cities. At least the people that were working, the most of those cities are still being overrun by the immigrants that are coming in, that are being overrun in this country and other countries. It's not just here.
Hmm. Yeah, a lot of things to um, be preparing for and anticipating and being cautious of and being aware of moving forward. It seems like we're moving into a a new regime and many of the things that we enjoy today will look a lot different in the future.
Well, two things I tell people when it comes, one to the market and one in general. The stock market that I knew when I started 40 years ago doesn't exist anymore. 90% of the trading was the general public. People were buying and selling stocks mostly because they wanted to be part owners of businesses. Now over half the money is in passive funds. It's not actively traded. It's tracing an index or a group of a type of sector performance. The manager is not, he or she is not buying and selling a lot of stocks each day. The remaining half, about 75% of that, is in computer driven program trading. Algorithms are deciding whether to buy or sell something either by a wording or some other type of sophisticated trading system. So that market has changed. But what I've noticed the most, someone asked me the other day, and I'll close with this, Darryl. Someone said, if you had one thing to say the difference now than any other time in your career, 40 plus years, what is it? And I said, I've never seen the level of complacency given how many factors of things that are happening out there now that are not being expressed at all by the financial service community. I have no doubt, given how the valuations of where things are, given all the things that are happening now, and given how little time is spent even discussing those things, the level of complacency has never been higher in my career.
Yeah, yeah, yeah. That's a grand picture. Well, Peter, appreciate you coming on and everything. Always giving us a good wake up call. You all, get out of debt, live below your means. Find your faith. We represent Jesus Christ and everything. Find what you need, to get you through these times that are coming up. And thank you for coming on.
Well, I've seen the change in you already. I'm here. I'm glad to hear what you've done. I know what you were thinking of before, and I will tell you the dividends that you'll receive from that will not only be paid here, but they're going to be paid in your next home.
Yes, agreed. I had to reset. Sometimes you got to reset. So yeah, it's good. Thank you for coming on.
God bless, my brother.